Yesterday, I got the chance to sit down with Bill Clinton, the former president, at the 12th and final annual meeting of the Clinton Global Initiative. In a wide-ranging conversation on CGI and Hillary Clinton's campaign for the White House, we touched on lots of economic issues as well. And here's what he had to say about potential job losses from trade proposals like TPP, even though he is still defending NAFTA. He also talked about where he thinks the U.S. corporate tax rate should be. And here's a surprise for you. It is not what the Hillary Clinton campaign is promoting right now. Listen in. What do you think about TPP? Because a lot of people look at that as the legacy for NAFTA.
Well, first of all, I don't think it has anything to do with NAFTA, but I think that the geopolitical reasons for it, from America's point of view, are pretty clear. That it's designed to make sure that the future of the Asia-Pacific region economically is not totally dominated by China. I think it's pretty clear what Hillary said about it, and that is that there needs to be provisions on currency manipulation that are enforced, and there need to be, again, measures put in place in America so that we take care of whatever dislocation ever happens simultaneously. Everybody makes nice about doing something about it, and then, at least for the last 20 years, for most of the time, Congress never wanted to do it.
Yeah.
And you just can't do that. It's not true. In places, especially where there's physical isolation, the market economy will not make up the difference unless there is a real investment or a real investment incentive, or both.
What's the right corporate tax rate to make sure that you're bringing in income but also incentivizing businesses to be investing here in America? Is it 15%? Is it 35%? Is it somewhere in between?
I was the president who urged it to be raised to 35%. But when I did it, it was precisely in the middle of the OECD countries. It isn't anymore. So I think it should be lowered. This is just me now, I'm not speaking for you. I think it should be lowered, and we should do sort of what the Japanese did. We should try to get it as close to the international average as we can, so we'll be competitive. But we ought to have an alternative minimum so everybody pays something that's acceptable, and you don't have to worry about finding every last tax shelter and every last dodge and every last this, that, and the other thing. Just say, do that. And then I would like to see a repatriation initiative that works a little bit different than it did when President Bush signed one. This is one actually where he's probably has a more liberal position than I do because he got so mad that he signed the 5 3/4% repatriation bill, and he said none of it was reinvested. It was all stock buybacks, stock buybacks and everything. I think we should allow some repatriation if X percent of the money, whatever it is, some percent, goes into buying investments in the National Infrastructure Program. If we have some infrastructure bank or whatever, because we can create a lot of jobs and we need to raise a lot of money, and the government doesn't have it all, so we're going to have to get private investment. This is not rocket science, and it shouldn't be considered theology. This is a practical problem that we should do whatever is necessary to maximize job growth in America.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.